Good day, ladies and gentlemen. I hope you're well. And welcome to another live stream on the Crypto Princess channel. Today we'll be talking about the Pi Cycle Indicator. So the Pi Cycle Indicator is a technical analysis tool. It's designed to signal when Bitcoin is nearing the market top. It's based on a relationship between two moving averages, the 111-day simple moving average, and it also tracks the price of the 350-day moving average times 2. So this is the moving average of Bitcoin for the last 350 days. So we're going to go into the Pi Cycle top today. We're going to cover all of its history, what it is, what it does, how it's worked in the past, etc. Just before I do that, quick shout out to the Princess's Army, Mr. Alex Storyteller, Black Hat Team, Rob C, Mr. J, Mike Volmer, John Legend, who I've put in the Princess's Army. He's supporting me literally since I started my live streams. He's always leaving comments, and I really appreciate that. And also Wagas, who regularly posts in the Discord. Satoshi is with me today. Unfortunately, there's nothing I can do about it. If I have him outside the door, you'll hear him meow and scratch on the door. He doesn't listen. A little bit like me, he doesn't listen. Let's see who's in the chat. Just move him a bit closer. Okay, so we've got John Legend. I hope you're well. Good afternoon to you as well, Rob C. I hope you're well. We've got Jessie. How are you, Jessie? You've changed your profile picture. It looks lovely. We've got Chipper as well. Hello, Chipper. Good morning to you. Good afternoon to you. I do apologise. I'm not entirely sure where you are. And then, yeah, at the moment, that's all we have in the comments. I'm pretty sure that there are other people, but that's all we have in the comments. Do pop in and say hi. And obviously, we have Nightbot. I do love Nightbot. Same here. This is it. So basically, the UK and parts of Europe have had their time change. So we were on British Standard Time, and now we're on, GMT time, Greenwich Mean Time. In America, I think they're changing the clocks on the weekend. So right now it's 2:30 for me. 2:45 for me. And normally I used to go live at 3:30-ish. Okay, let's have a quick look at the indicator then. Okay, so the Pi Cycle top is the indicator shows when the 111-day SMA, simple moving average, crosses above the 350-day SMA times 2. The Pi Cycle top signals that Bitcoin may be at or near the market peak, i.e. the top of the bull cycle. The indicator is unique because it doesn't just use price data, it uses a mathematical relationship specifically tied to the ratio of pi 3.14. Yeah, 3.14, hence the name. So pi, for those people who are unaware, I'm pretty sure all of you are, is the number that tells you how to calculate the circumference of a circle. So it's quite unique in that sense. So what we do is how the Pi Cycle top is used. You watch for the crossover. The key signal comes when the 111-day moving average, simple moving average, rises above the 350-day moving average times 2. Historically, every time this has happened, it has marked a top in Bitcoin. You need to look for that confirmation. So traders still often check other signals like trading volume, RSI, market sentiment to see the bigger picture, because the pi cycle top itself has never failed. Although it's never failed to signal the top of of the top of a cycle, we do have other tools to look at as well. And what we'll do is we'll probably go through all of these tools so you'll understand what trading volume is and how it signaled the top, or what was it like at the top of the market, etc., sentiment and all the rest of it, and going into the psychology. The psychology of the market it's a massive thing, and it's very, very important. So this crossover regarding the pi cycle top has reliably indicated when Bitcoin has topped, or just before it's topped, or after. Although it hasn't given the exact date of the top. Now, altcoins often peak shortly after Bitcoin. Historically, when Bitcoin reaches the cycle high, traders rotate profits into altcoins, causing many of them to top a little bit later. So, Satoshi. So when Bitcoin tops, altcoins normally top after that, historically. It's not an absolute rule. Altcoin cycles vary, but it's a trend that's well observed in crypto markets. It's also a long-term indicator. It's not a short-term tool for traders or for daily price swings, etc. Let's just quickly have a look at the chat again. Okay, Mike Volmer has joined us. I did shout you out earlier because you're part of the Princess's Army. Zenze Z, how are you? I hope you're well. I think this is the first time you're here, so welcome to you. Oh, and Julie. Oh, Julie, I hope you're okay. Welcome to the live stream. We do need to catch up, Julie. We do. I did actually watch all your live stream yesterday. I had to replay it because I came in quite late, unfortunately. And I know the live stream started late as well. But yeah, no, that was a shocking live stream. Can one of the mods please put down Julie's channel in the chat? So for those people who are unaware, Julie is another crypto content maker. Okay, so that's how the pi cycle top is used. Let's talk about the accuracy of the price cycle top. So we're going to go through all of the charts. I'll show you exactly what happened. But let's just recap. In 2023, we did have a double peak. So we had two tops. We did have a top in April. The pi cycle top was indicated on the 5th of April. The price was $142. The cycle actually peaked on the 9th of April, meaning the pi cycle top was 4 days off, and the price difference was only $87. Now, the second peak in 2013, Bitcoin's first bull cycle, was on the 30th of November. Now here, the pi cycle top gave the indication on the 1st of December, but the market actually topped on the 30th of December. So it was 1 day afterwards that the indicator gave the signal, if that makes sense. But the price difference was only $15. So the signal was given on on the 1st of December at 1,150 US dollars. The actual all-time high was the day before on the 30th of November, and the price of Bitcoin was 1,135. So it was only 15 US dollars off. Bitcoin's second bull run, which was in 2017, the Pi cycle indicator, indicated that the top was reached on the 15th of December 2017. The price at the time was 17,900. 2 days later, the market actually hit its top. So on the 17th of December, that was when the cycle peaked. The actual peak of that cycle was 19,650. It was only 2 days off, and the price difference was 1,750. 2021, which was last bull cycle, the Pi cycle top was gave a signal on the 12th of April 2021. The price of Bitcoin on the 12th of April was 59,600. Bitcoin actually peaked on the 14th of April at 64,800 US dollars. It was 2 days off. And what was it? Maybe four odd £1,000 that are US dollars off. Let's have a quick look. I think I do have let's have a look at that. Okay, so here we go. So here we've got the first top, Bitcoin's first top, and then we have the second peak over here. Now we're going to talk about what led up to this peak and the drop, and then what led up to this peak and the drop. So the Pi cycle indicator doesn't know what's happening in the real world, doesn't know what's in the news, but it still hit the top both times on the peaks. Now, running up to the first peak, one second. Running up to the first peak, and we went over this a little bit last live stream. We had a banking crisis, another banking crisis. So in 2028, we had the banking crisis. We also had property prices fall, etc. In March 2013, the Cyprus government proposed a tax on bank deposits to rescue its struggling banks. We've heard this all before in 2008. No wonder people were panicking. The news of the crisis literally triggered mass panic in European banks as depositors feared losing their savings. This drove Bitcoin upwards. Bitcoin, being decentralized and outside of the traditional banking system, became a refuge for investors looking to move their money to a safe, liquid asset. This crisis drove a significant amount of international inflows into Bitcoin, fueling the price surge. There was a lot of other things as well. So we had the Cyprus banking crisis, but we also had growing awareness and adoption of Bitcoin. Bitcoin was starting to get mainstream media attention for the first time in 2013, and that sparked curiosity and attraction amongst new investors worldwide. Early adopters and tech enthusiasms used to buy Bitcoin in volumes. They used to buy Bitcoin because they were in the know. But then you had average Joe fearing what happened with the banking crisis enter into Bitcoin, pushing up the price. Bitcoin's first price surge increased, creating a loop where price rises attracted more buyers and more buyers pushed the price even further. It was complete and utter FOMO at this particular time. Have a look. Yeah, so here it is. So it was in March time we had the crisis in Cyprus, and then in other places in Europe. People then took out their money from the banks, bearing in mind there was a bank run. People were lining up outside the banks again, blah, de, blah, de, blah, and people started to put money into Bitcoin. And then here, the pi cycle top was triggered. And you can see the yellow line, which is the 111 SMA, simple moving average, cross over and above the blue line, which is the slower 350 SMA times 2, doubled. 1, 2, 3, 4, 4 days before the actual top here. And I'll tell you what happened here. Look at this candle. Okay. Okay, so we have to talk about Mount Gox again. We did touch upon Mount Gox last live stream. We need to talk about it again. So on the 10th of April, the Mount Gox exchange, which held Bitcoin transactions, or did Bitcoin transactions trading, it halted trading due to a system overload from a massive surge in activity. This triggered panic selling as traders couldn't buy or sell normally, amplifying the price decline. Overheated market, and it was just a liquidity crunch. Bitcoin had risen from $13 to over $230 in just a few months, and that made the momentum unsustainable. And you will see this with all of our peaks. The price momentum just becomes unsustainable. So when the first signs of trouble appeared, traders rushed to sell, creating a liquidity crunch that deepened the decline. The price of Bitcoin dropped, and in 11 days it dropped 65%, and it bottomed in around $80. So from 230 down to 80 in just 11 days. Despite being serious, the correction was short-lived, about 11 days, acting as a market shakeout rather than a full-blown bear market. So Mount Gox. So in April, in 2013, in April, Mt. Gox temporarily suspended trading due to technical issues caused by a surge in users and transaction volume, which collided, with the Cyprus banking crisis. This caused a sharp, short-term drop in Bitcoin's price, but the exchange did not collapse, and that's very, very important. The bear market that followed we didn't even go into a bear market. So we had the pi cycle top, and then the price dunked a bit. So on October the 10th, the 10th of April, Mt. Gox temporarily halted trading due to the technical fault. Bitcoin's price dropped sharply. And then on the 11th of April, which was literally the next day, Mt. Gox resumed trading, if that makes sense. So this was what this drop was about. Okay, we will have a look at the next drop, which is in December. Just very quickly. Oh, I do. This is actually what I love. This is the best thing about crypto for me. It's literally going and checking out what happened in the past cycles. I absolutely love that. Mr. Alex Storyteller, I did mention you before as well. You are part of the Princesses Army. If anybody wants to join the Princesses Army, it's very easy to join. We just do fun things and we just support the channel. And yeah, if you like to join, just join the Discord and just drop me or just, just let us know, let someone know. Oh, hello, David. I hope you're well. David. I haven't seen you here for a little while. Okay, so we should here, December 2013. Now, from the Pi Cycle indicator, 2013 was the only year that we had a top, because in 2021 we didn't have a Pi Cycle double top. We only had one in April, if that makes sense. And I think that's one of the reasons, and I'm pretty sure, I know there's 100 others, but that's one of the reasons that people thought Bitcoin was going to the moon, because the Pi Cycle top didn't trigger in the late part of 20. So that was Mount Gox, which was huge, because remember this, Mount Gox was a temporary hiccup, the exchange did not collapse. In February 2014, that's when Mount Gox officially collapsed. It filed for bankruptcy after losing 850,000 Bitcoin due to hacks and mismanagement. It was a long-term collapse. It caused a prolonged bear market and the loss of confidence in Bitcoin's exchanges. Because for a lot of people back in 2013, back in 2014, Mt. Gox was Bitcoin. So in April 2013, there was a temporary suspension and a short-term dip. While the 2014 event was when Mt. Gox actually collapsed. What happened afterwards in May 2013, Bitcoin had rebounded above 2,000 US dollars, showing that investment confidence remained strong despite the sharp correction. It was that continued the bull market. The bullish momentum carried Bitcoin higher, eventually reaching 1,165, as we mentioned earlier, in November of that year, the historical peak at the time. This demonstrates that short-term corrections, even severe ones, don't necessarily derail the overall bull cycle. It was a massive shakeout. It removed weak hands from the market, leaving strong and committed investors. This clearing of spectacle traders help stabilize the market and make way for the next major surge. Now, in November 2013, let's talk about the run-up to November 2013. Why did we top? Why did we peak there? So after recovering from April 2013's correction, where we went from 280 US dollars down to 80 US dollars, we quickly went above 200 again. Bitcoin entered a sustained bull run throughout the middle of 2013. By November, the price had skyrocketed to $1,000. Amazing. Oh my God. Like, this was fueled by increased global interest and speculative buying. The rapid growth drew attention from both retail and institutional investors, amplifying buying pressure. Global market adoption and media attention. New exchanges were launched in Asia, in Europe, giving more access to Bitcoin. Mainstream media started to cover and highlight Bitcoin's rise, attracting first-time investors and other tech enthusiasts. I can't say that word. Oh my gosh. Awareness of Bitcoin's limited supply of 21 million coins also contributed to the narrative of scarcity, increasing the urgency to buy. Bearing in mind, back in 2013, most people were actually mining their own Bitcoin. They had paper wallets. It's not like what we see now, but scarcity at that time was a real issue. Speculation and FOMO. Stands for fear of missing out. Momentum driven by a just driven by the market as traders rushed in, hoping to catch the next level up. Social media, forums, early crypto communities amplified the excitement, creating a feedback loop of rising prices, attracting more buyers. The psychological factors included the laws of the lure of getting in before it's too late, and a buying frenzy. Okay, so let's have a quick look at the So yeah, so there's the bear market top was, is this the daily chart? Yep, there. And that's the next day, the pi cycle top. The pi cycle top was triggered. Now, as soon as after taking profit, so after Bitcoin hit 1,165 at the end of November, many investors immediately sold to lock in gains from an explosive bull run. Come off it, we just went literally below $100 to over $1,000. Early adopters and traders dominated the market. So when they sold, it triggered additional selling pressure and it created a domino effect. Prices had surged so rapidly. So in May, the price was $200. By November, May, June, July, August, September, October, November, 7 months, it was over 1,100. The price was, I mean, there was so much extreme gains that the market was so overheated, and there wasn't enough new buyers to sustain all that noise. Yes, so we kind of slipped into a bear market. Bitcoin, the price decline after Bitcoin entered its first bear market. The dip was not a short correction, it was the first full bear market, and it signaled the end of the 2013 bull cycle. Bitcoin fell 86% from 1,165 to $150. It was huge. Now, the bear market, or I just quickly, just before we check what happened in the bear market, I'm just going to go to the comments again. Oh, JR, welcome. I hope you're well. Oh, thank you, Army Piper. Welcome. French Toaster, I hope you're well. L- Lasers Go Pow Pow, I hope you're well. Welcome. Am I muted? Oh my gosh. How did I mute myself? Am I still muted? Oh, back now. Okay, thank you. Oh my gosh. Oh, I was just talking so. Oh, yeah. So yeah, okay. I do apologize. I was bubbling on and I wasn't on the screen. Okay. Ugh, gosh. Okay. Yeah, I get it. I get it. I know exactly what happened. Oh, I do apologize. I just went off on one. Thank you. Thank you, guys. One second. Satoshi. Gosh. Okay, so after the bear market of November 2013, we went from a peak of 1,165 on the 30th of November, one day before the Pi cycle top was hit. Bitcoin fell 86.9%, roughly over 14 months. That was absolutely massive. Just one other thing that I completely forgot to say about November 2023. The lead up to November 2023, a lot of the investment actually came from Chinese investors. And around about that time as well, China flooded the market. China have flooded the market loads of times. It's manipulated the price so many times, especially in 2021. We see it again. So a lot of investors that came into the market in the late part of 2013 were Chinese investors. There was a market cleanse. The correction removed speculative traders, weak hands, leaving strong long-term holders in the market. And this process helped to stabilize Bitcoin for further growth. The November 2013 cycle shows that mass short-term gains can disappear very, very quickly, and we can have a prolonged correction. Despite the severity, though, Bitcoin recovered in the following years, reinforcing confidence in the long-term adoption and its scarcity. The bear market always helps to establish a pattern of boom and bust cycles, and we see this every 4 years, and I do believe we will see this next year as well, which is why many analysts track indicators like the Pi cycle top, although we can't always rely on the Pi cycle top, because when I get to 2021, it only hit the April 2021 top, if that makes sense. November was probably a bounce. So after Bitcoin's crash, mainstream media went wild. It declared Bitcoin a failed experiment. That was huge at the time, absolutely huge. And it said it was dead. And that just fueled fear. Headlines in major news outlets framed Bitcoin as a bubble, as a scam, as a fad, disencouraging new investors and causing panic selling. Many people assumed that the experiment had failed completely, believing Bitcoin had no future, which contributed to deep psychological shock across the market. Despite this, long-term investors and early adopters maintained their conviction, viewing the volatility as part of the asset's growth rather than a sign of permanent failure. Over time, the market stabilized, adoption grew again, and confidence returned. But the narrative of Bitcoin being dead and a failed experiment continued in the media for many years. We will look at 2017. I absolutely love the 2017 bull run. Let me just quickly show you. I don't know if I've got it. Let me just check. Yes, it is Satoshi. So this is Satoshi. Satoshi, say hi to Army Piper. Satoshi is lovely, but he is such a dog. He follows me around all over the house. He scratches on doors and he screams if I don't let him in or if I don't pay him any attention. So this is I'm going to get two, and I'm probably going to breed them as well. So he's a Siamese cat. He's quite rare because he's a blue point Siamese cat, really nice blue eyes and everything. But yeah, I was thinking of naming him Sherlock, the second cat Holmes, but I've decided to name him Satoshi and the next cat Nakamoto. So I'll have Satoshi Nakamoto. I love animals, or animals. Oh, John 360. I hope you're well. Yes, China was like that. Come on. Ugh. They do, yeah. And he has so much stuff. Seriously, I've bought him so many things. Okay, I just want to quickly show you this. This is the 2027 bull run, but oh no, it's not. It is, but it's not the chart that I wanted to show. 1 second. This is the one that I wanted to show. So when I talk about 2017 quite a lot, and I do say it is my favorite bull run. It most definitely is. Look at this chart. We go from December, well, even before that in 2016. But can you see it literally goes like this, and it's going up, 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 up. There are a couple of dips. I think which one? I think this dip here was caused by the link, what they called those twins, Winkelized twins or something. They tried to do an ETF or something and it didn't go through. I think that caused this dip here. But look at it, look how beautiful this chart is, and then it just zooms up. So we'll be learning all about this, what happened in the 2017 bull run, and we'll be learning about how the Pi cycle top was reached, if that makes sense. Okay, so again, the Pi cycle top is two moving averages, two simple moving averages, the 111 day moving average, simple moving average. When that crosses with the 350 day times 2 simple moving average. Now, in 2017, remember, before every bull run, what do we have? The only thing that's stationary and static in the market, which is the halving. So we have the halving. Everything else is up for negotiation, where people go, the market cycle, we're in this part, we're in the depression part, we're in this part, we're on that part, we're in the, whatever part. So in 2016, we had the halving. 2017, we'll have a bull run. So for Bitcoin, prices rose from about $1,000. I know you guys have heard me talk about the 2017 bull run. I just love it so much. From about $1,000 all the way at the start of 2017, to nearly 20,000 in December. That's a 19x increase in less than a year. Now, the surge was driven by retail FOMO, early adopters, investors who are reinvesting their gains, the growth of the global awareness of Bitcoin. A lot of people who I have interviewed entered into Bitcoin in 2017. As the price climbed, mainstream media and financial bloggers began reporting on Bitcoin's rise, attracting even more investors. Institutions had a massive part to play in the 2017 bull run. It was the first time they had really come in to crypto. There was an explosion of ICOs, initial coin offerings. Ethereum was launched on initial coin offering. It made millionaires. Like Ethereum, I think it was like literally cents when it first launched, and it launched on an ICO as well. There was a lot of new coins that were launched, and this just helped with everything, all the price go up. Now, there was not as many coins as we have today or that we had in the 2021 bull cycle. So it was a little bit more concentrated. ICOs fueled massive capital, a surge of massive capital into the crypto ecosystem, increasing Bitcoin's liquidity and demand as investors needed to participate Bitcoin to buy other coins. Institutional investors and funds entered the market, leading to legitimacy and credibility of the market, and that added serious capital to the bull run. We just spoke about the media, the hype, the social media FOMO. Bitcoin's coverage dominated mainstream media, often with headlines. Oh, I'm going to take that chart off just in case. Just in case, I'm just going to take that chart off. Yes, it is. And we'll probably be doing a live stream on the halving. So we will talk about a lot of things that I've not spoken about the halving. And there is so much to do with the halving. Like, the more you understand Bitcoin, the more you realize you don't actually know anything. Okay, so let's go back to 2017, the ICOs. Okay. Bitcoin's coverage dominated the mainstream media, often with headlines like Bitcoin mania reaches record highs, or is it the new gold or digital gold, etc. Social media amplified the FOMO with forums, YouTube channels, and Twitter threads spreading stories of overnight millionaires. And psychologically, that momentum was created. Price started to rise, and as it led to hype led to more buying, pushing the prices up higher. The euphoria of the 2017 bull run was pretty much, we did see it in 2013, but it was stronger in 2017. The price surged in November from 10,000, early November, it was 10,000 US dollars. And then that kind of marked the phase of the parabolic phase, because from 10,000 US dollars, it went to nearly 20,000 US dollars by the middle of December. So the market saw this momentum and daily gains of hundreds, if not thousands of US dollars. Thousands of US dollars. Again, there was a lot of FOMO, a lot of media, a lot of headlines. Bitcoin soars past 10,000. Bitcoin's, 20,000 soon. 20,000 soon. Social media forums and all the rest of it. Psychology-wise, the surge triggered mass euphoria, excitement, and urgency as people felt that the market could only go up. Newcomers poured in, often ignoring or not understanding the fundamentals, driven entirely by hype and the rise of rapid price rise. Experienced investors were aware that the market was overextended, but they often struggle to act against the social momentum of the market. Now, I've said this before, Bitcoin or the market does not top on positive news. Sorry, it does not top on negative news. So as soon as there's a negative piece of news, it goes down. It doesn't do that. So it's not like positive, positive, positive. Oh, something negative and it goes down. No, it actually tops on positive news. So you have all this positive news going up, 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 up. Bitcoin tops, and you still see the market. You still see people trying to buy in and expecting the price to go up. Okay, so let's have a look at the Euphoria. The Euphoria, speak about it a little bit more. The ICOs, altcoins, leverage trading, all of that created an environment of extreme speculation. Exchanges were overwhelmed by trading volume, price volatility, spikes, making the final run to 20,000 US dollars thrilling, tense, all the rest of it. It was peak euphoria that we'd never actually seen in Bitcoin before. By mid 2017, by mid December 2017, Bitcoin neared to 20,000 US dollars with the narrative of things like Bitcoin's going to the moon, everyone must buy now, the future of money. See, that was all good stuff. And that dominated social media, that dominated just the mainstream media as well. At this stage, rational thinking was out the window. It was emotional mania, setting the stage for a dramatic correction, and that did happen, and that was following the Pi cycle top. So in 2017, the Pi cycle top was the indicator signaled it on the 15th of December 2017. The price was 17,900. 2 days later, the cycle actually peaked on the 17th of December. And the price on the 17th of December, or the actual peak, was 19,650. Bitcoin, the Pi cycle indicator was only 2 days off, and the price difference was 1,550. What followed was an extended bear market, a massive bear market, and the price of Bitcoin fell 84% over the next year or so. So yeah, we had all of that narrative. It was all mainstream media and all the rest of it coming in. The institutions were coming in, the ICOs were taking off, all the rest of it. Let me just quickly show you where the Pi cycle top hit. Here. So you see the yellow line, which is a 111 simple moving average. It crossed over the blue line, which is the slower 350-day times 2 moving average. The Pi cycle top was here 2 days later. The thing is, I can't zoom in on this because it's actually a screenshot, but believe me, 2 days later, it actually peaked. Yeah, it actually peaked 2 days later. That's super accurate. All of this here, look, here's November. Look at all of that. I mean, I must admit, that's just my favorite bull run ever. I love it. I love 2017. I love studying 2017. It's lovely. Oh, 2-Bit Crypto. I hope you're well. Oh, thank you. 2-Bit Crypto. I don't know if somebody can put 2-Bit Crypto's link in the chat. He's a fellow crypto YouTuber. And I've worked with 2-Bit before. He's on the channel doing we've done a crypto stories interview. If we zoom out, look at this beautiful bull run. Come off it. Oh my God, that's just my favorite bull run. Shall I tell you what happened to trigger the bear market? What time is it? Oh gosh. Okay, let's talk about this bear market. I don't know if you can see my cursor, because obviously I can't see what you guys. Yeah. Okay, 1 second. Let's talk about the bear market. So 2017, Bitcoin's second bull run. I just love this stuff. You had that get rich quick mentality, that mania, that retail investors and newcomers were caught up in this FOMO. They were expecting to become millionaires overnight. You had the ICO frenzy. Headlines were celebrating startups raising millions in literally minutes using cryptocurrency. And you had the Pi cycle top. It indicated that the market was overextended. It signaled extreme bullish sentiment, warning of a likely correction. Now, when we look at, and one point we will look at the sentiment oscillator, if that makes sense. The fear and greed oscillator, the fear and greed index, and we'll see what it's like there, because that's not as accurate, definitely nowhere near as accurate, the Pi cycle top. At this time, Bitcoin had literally captured global attention, and narratives were just overwhelming. They really, really were. So after that rise from 10,000 US dollars from November to 20,000, almost $20,000 in December, Bitcoin fell, and it fell hard. This is like so painful. That's why you should all think about taking profits. I mean, nothing that I say is financial advice anyway. But by February, like 2 months later, Bitcoin from just under 20,000 US dollars. February 2018, it was 6,000 US dollars. That's how quickly it fell. When it falls, and it falls hard. Bitcoin experienced just so much volatility, a sharp rebound, a sharp drop. Investors try to save what they could, but they really, really couldn't. It really did hurt a lot of people because it just happened so fast. Many retail traders suffered huge losses, leading to widespread panic and mistrust of the crypto market. But really, in reality, it's their psychology. So what happens is that when you have traders, bless them, they're very, very good, especially in a bear market. They're always doing their risk assessments, their risk management, looking at all of their indicators, blah, de, blah, de, blah, putting in a lot of effort because they know that they can lose money. Then the bull run starts, and then the run starts to get heated. What they're noticing then is that they're just making money. They're making a lot of money, more times than not. Their trades are successful, all the rest of it. And psychological wise, what they tend to do is they tend to put on bigger positions, and they tend to reduce their risk management. So often you will see a trader have his best performing year in a bull market, but straight after a bull market, he has his worst performing year. And that's very, very common. Very common. It's so sad. It really, really is. And the same thing for investors. Investors know to take money, blah, de, blah, de, blah, but they often round trip as well, especially with altcoins. Most altcoins only have one or maybe two cycles, if that makes sense. So the narrative really shifted. So after the Pi cycle top was hit, and soon afterwards, Bitcoin topped, blah, 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 blah. We headed down into a bear market. Media headlines went from, oh my God, like, oh, it's so epic, Bitcoin to 20,000 US dollars, stories and things like that, to warnings, oh my God, the Bitcoin bubble is about to burst, the crazy crypto mania or whatever, it ends in tears, and Bitcoin's dead again. We hear this all the time, Bitcoin's dead. Public perception shifted dramatically, viewing Bitcoin less as an opportunity for instant wealth and much more volatile and risky. Bitcoin bottomed, bless them. It's really, really hard. It really is. Because people are, it's really difficult to save up money and, and invest. It's quite painful when you look back at the charts, because Bitcoin bottomed in December, so literally a year afterwards, at 3,150. So from 20,000, or just just under 20,000, to just over 3,000. This was a 84% drop from the all-time high. The market stayed in a how do you say it? I can't say it now. Oh my God. Consolidated. I do apologize. It consolidated. It went sideways for pretty much months, and it fluctuated between 3,000 and 4,500 through much of 2019. This did again allow the ecosystem to stabilize, and also weak hands, bad projects, etc., were taken out of the market. However, we were still building infrastructure, and there was still institutional progress, especially when it comes to mining, because the miners went down in price, institutions were able to buy them up cheaper, run them, etc. So we don't always have to look at investing and trading. There's mining there as well. Now, during the period of this low price, bearing in mind miners do exceptionally well in the bear market because they buy, these machines so much cheaper, and then it's they build through the bear market. Miners are they do really, really well. Okay, so during this low price period, exchanges, wallets, price processing, mining, improved security, transparency, all of these services were improving. The infrastructure for crypto and Bitcoin was improving. Institutional players began to test solutions and regulatory framework, which later laid down the groundwork for future adoption. Now, the bear market of 2018 was brutal. So we had all that psychology as well. Many retail investors lost faith. Many retail investors lost faith in cryptocurrencies, Bitcoin, etc., after the crash, enforcing this failed experiment narrative that was running in the media. Experienced investors who had held through the bear market before, they developed more resilience and discipline, and they were actually able to hold a lot more through the 2018 bear market. There was a lot of fear that dominated the market. FOMO was replaced by literally accumulation, sell-offs, investors watching for when the market will bottom and then rise again. And the bear market, again, as it does every cycle, and it will humble us in 2016 as well. The bear market serves as a learning phase for both investors, traders, miners, exchanges. It broadened the crypto ecosystem. It teaches lessons about leverage and speculation, psychological traps, and volatility. And these lessons help prepare for the next bull cycle. The euphoria phase, which was absolutely manic. It was the first time that we had seen so much emotions in Bitcoin and crypto. Bearing in mind, this was the second. This was the second bull market, if that makes sense. So in December 2017, we had all of that mainstream media labeling Bitcoin as a bubble, as a mania. And then afterwards, straight afterwards, it was like dead. It was a failed experiment. It crashed. And there was a strong narrative of failure. Investors were caught between FOMO and fear of losing gains. And this created extreme emotions and behaviors in the market. Many retail investors sold at a loss. And I'll tell you who else sold at a loss. In 2021, Tesla sold at a loss. And we'll come to that, and we'll do that in the next live streams. The headlines just portrayed Bitcoin as overhyped, risky, unstable. and it just encouraged people not to participate. Oh, Lauren, I hope you're well. Good to have you here, Lauren. Okay, so we're just going to end it here today, just with the market humbling everyone again. Long-term holders, crypto enthusiasts. Sorry, I can't say that word. They remained committed. They view the bear market as a natural consolidating phase. Weak hands were out. The true believers, the true revolutionaries stayed. The market reinforced the lessons that extreme volatility is part of Bitcoin's growth. It's shaped by psychology. It's shaped the psychology for future cycles. And the experience created a collective understanding of boom and bust patterns. It influenced investor behavior and expectations in the future cycles. And also, this narrative of a 4-year cycle stuck, if that makes sense, because we had it again. So that was a massive, massive drop. So remember, after the Pi cycle top, and again, what is a Pi cycle top? It's two things. It's two SMAs. And when they overlap, that's roughly very, very close to the top. In April 2013, it was 4 days off. In November 2013, it was 1 day off. In December 2013, it was 1 day off. In December 2017, it was 2 days off. And in 2021, which we haven't covered, it was again 2 days off. The bear markets that followed, 2013, we had an 86% drop over 14 months. That was the bear market. 2017, it was about a year, the bear market, and it was slightly less. It was 84% drop. And I haven't covered 2021. I don't have the time, but you know, we'll do that next week. Just to let you know, I'm actually oh, hello Andrew, I hope you're well. Oh, bless you, Andrew, you're so sweet. So just very quickly, Thursday, there will not be a live stream and there will not be a story. I'm actually traveling to Dubai, and I'm traveling by private jet. So I'm going to show you guys some photos and stuff. So yeah, let's see if that happens. But obviously, I'm not paying for it. A family member is. So yeah, we'll see. We'll see if that happens. Quite exciting. I just kind of confirmed it today that I would go with them if they are continue to go, if they do go. But this Thursday is very unlikely we'll either have a live stream or a crypto story. However, Tuesday next week, we will continue off with the Pi cycle top. We'll probably add in there maybe some Fibonacci, because that's another way that we can sort of get the gist of when the top might be in. It doesn't provide an exact date or anything like that. And we'll probably do some other things as well. Go over some other indicators, etc. Because I'm starting to watch them now. Yeah, so could everybody please like the stream and also leave a comment? Just for those people who are unaware, please do follow me on X. I do have a Discord group and I do have a Telegram group. We're all lovely. We're all really, really nice. Yeah, thank you so much. I will see you guys next week.